The Bible says, be not deceived. Whatsoever a man soweth, that shall he also reap.
All right, it's 4 p.m. on Wall Street. Do you know where your money is?
How much should I invest?
I'm really looking for some direction.
Should I hold on to my house as an investment for my future?
What should we do to have money that we're putting aside?
Welcome to Financial Issues, where we align reality with truth. Conservative talk radio you can count on. Financial issues that you need to know.
We face a disintegrating economy, a weakened defense, and an energy policy based on the sharing of scarcity. We will simply apply to government the common sense that we all use in our daily lives.
Now, here's your host, Dan Celia.
Good morning. Welcome back to Financial Issues. I trust everyone had a good weekend on this Columbus Day. Some people off today. Of course, the bond markets are closed. The stock market is open for business. Probably wishes it weren't, but it is open for business. We see last, Friday, when we look at Friday's numbers, not such a good thing. Friday's numbers, down about 115, the Dow was. By the way, if you were looking to get into some large cap Dow kind of companies and you missed it and you didn't get in and all year has gone by and you didn't get in, well, guess what? You now get your third do-over, third chance, because we're back to December 31st numbers. So you can think of today as market day, January 1st. Well, it would actually be the 2nd, January 2nd, when the market opens. So it's pretty much what we've got, at least in the Dow. S&P surely headed towards that territory as well. But if you want to get in, I'm not recommending it, by the way, but if you want to get in, you basically, it's like getting in January 31st or January 2nd. So that's where we are. So all of this volatility, all the ups, all the downs, all the dancing in the streets, all the crying through the volatility over the last few months, here we are back where we started this year. This has been an incredibly volatile year, as we predicted back in January. That has been one prediction that certainly will likely hold. So right now, that's where we are. Global signs of slowdown. The headlines in the Wall Street Journal this morning, they say global signs of the slowdown ripple across all markets as we see the volatility index increase. Policymakers, it says government central bankers have fewer tools left to revive the economy after years of sluggish growth. I said this way back when, years ago. They have no tools. At least the central bank here in America, I think it stands for the central banks around the world. They have no tools. There are no tools in the toolbox. They haven't had any tools in a long time. They got one thing, quantitative easing. They don't have anything else, quantitative easing. Now, they may call it something else. They may try to make it look different, but when it's all said and done, it's going to be more quantitative easing because that's the only tool they have left. 866-300-9298. We are going to get with calls, stay with calls. By the way, 866-300-9298. By the way, tomorrow evening, I'll be in Little Rock, Arkansas. If you are coming out to the town hall meeting, make sure you introduce yourself to me. I love meeting all the listeners. I know there's going to be hundreds of people there, but nonetheless, come on over. I'll get there as early as I can and hang out for a little bit. We're going to get through the town hall meeting. We're going to answer a lot of questions. We're going to have a great time. So if you're not registered, it doesn't cost anything. But if you're not registered, you still have time to do that. You can go and register at afr.net, financialissues.org, or afafoundation.net. You can register at any one of those sites by clicking on the Faith Family Finance banner there and register. It doesn't cost anything. It's a free town hall meeting. You're going to come out. You're going to be informed. You're going to hear a little bit of an unedited version of Dan Celia. You're going to get some great information that are fundamental principles that you can put to use. We have some very up-to-date information. We're going to talk about how we got into this mess. I'm going to talk about how we get out of this mess and what you can do to prepare. It is a great time. We always have a good time. So Tuesday evening, tomorrow night, we're going to be in Little Rock, Arkansas. When you register, you'll find out where it is because I don't It's at I don't know the name of the church, but it's in Little Rock, Arkansas, and you can go to financialissues.org and register. Click on that Faith, Family, and Finance, or I believe it's on the AFR.net website, as well as AFAfoundation.net. So make sure you're registered because it helps us get a head count. We sure would appreciate it. 866-300-9298. If you want to queue your call up, our lines are open, 866-300-9298. As I said, on Friday, Dow was down 115, the NASDAQ down 102. The NASDAQ was down 2.3%. That's a huge drop in tech stocks. If you own tech stocks, you know that. NASDAQ down 102 on Friday, and the S&P was down 22. So right now, it looks like things are slightly in negative territory. We'll have to see how it opens, but most of the indexes in negative territory. How about oil? Oil right now sitting at $84.52 a barrel. That is unbelievable. I got to tell you, this is one that I surely missed. I was not expecting to see oil prices at anywhere. I was hoping, if you remember, when they started coming down, I was saying, wouldn't it be great if we could get to $90? Well, we're well below that. We're at 84. Right now, there is some tension between OPEC and between Saudi Arabia and some of the OPEC members like Venezuela, who is calling for a production cut. To have a production cut in order to bring prices up. But it looks like OPEC called over the weekend for an emergency meeting of the group to respond to these falling oil prices. It is unlikely that they're going to act on any kind of reining in of output. That is probably not going to happen. But they certainly would love to see the price go down. They are between a rock and a hard spot, and I got to tell you, I love it. Because for one time, since I've been following this in the early 70s, we finally have the upper hand on OPEC. They don't know what to do because we don't need OPEC. And it's getting close to where the world's not going to need OPEC. OPEC is no longer in the driver's seat when it comes to oil. Oh, they may be somewhat in the driver's seat when it comes to oil over in Europe and parts of Asia, but that's about it. And look, the Keystone Pipeline that this president doesn't want looks like it's turning east. Remember, I said the threat of the Keystone Pipeline is going to turn west and start sending it to China. They are doing the better thing. They're turning it east, getting to the eastern ports to be able to start shipping crude to Europe. So that's big news. And again, President Obama's got to be just thrilled over that. Now he's not going to have to deal with it much more. Amazing, isn't it? I mean, why would we want to create all those nasty jobs anyway? And if we create a lot of jobs, we're not going to have as many people on government assistance. That's not good for the progressive agenda. So we wouldn't want to do that. Anyway, 866-300-9298. So crude oil prices, we're looking at $84.52 right now. And by the way, they are continuing to be on the way down. They're down about 1.5% right now. Gold is up. Gold is up on a little bit of a weaker dollar. Gold is up on some of the Fed conversations. Stanley Fischer, the Fed vice chair, downgraded again. He downgraded global growth, talked about the IMF downgrade and himself going along with that. And it looks like this could prolong any interest rate hike that the Fed may have been planning to do or looking to do by the middle of next year and prolong it even longer. So we could have 0% interest rates for a long time. Very interesting. The markets didn't react much to that this morning before trading. So after hours trading, it didn't react much to that. Pretty interesting. Neither did Europe. But nevertheless, I mean, the Fed is going to not think about raising interest rates. We continue to see general economy around the globe continuing to decrease productivity. That's not likely to happen, and I find that interesting. So we see gold prices primarily on that news and maybe a little bit of a weaker dollar. But anyway, spot gold up 6 12 right now. It's at 12.29, which is nothing to shake a stick at. I mean, 12.29 is not a big deal. It's been around there all year long. We have silver at 17.42. Silver has not moved much at all. Silver usually the more volatile of the two, but silver has been once it got below 18. I'm sorry, pretty much stayed and hung around there. Corn is up slightly. We need some corn movement. Corn's down to 334.25. Love to see it at least get back up to 350 area. Copper is up. That's good news for that commodity. Natural gas still down, but it's at 386. Wheat's down. Cotton's up. Live cattle down. Food prices continue to be up. So that's where we are on the commodity front. 866-300-9298. We're going to go to calls. We're going to try to stay there. If you want to queue your call up, phone lines are open. Let me go to Connie. Connie is calling us from Virginia. Hi, Connie.
Good morning.
Good morning.
I have two quick questions.
Okay.
I am a state employee, so I have deferred comp, and I kind of got conservative and got out other than my match, and I put it mostly in bonds and safe things. So I thought safe, and I heard you say get rid of your bonds, and I just didn't get around to it, so they're still there. So I was wondering what you would suggest right now for me to do with that money. It's maybe like $20,000 or something.
Well, safe, Connie, is cash. Okay. I've not felt good about bonds. Safe to most investment advisors are bonds. I'm not in that camp. I believe I believe there's two things right now to invest in: equities, good solid stocks, and cash. Cash not being much of an investment because you're not earning anything, but great protection on the downside. Bonds, I don't think we're going to have that protection, although based on what I just talked about with the Fed vice chair talking about this downturn could lead to a prolonged interest rate hike. That would be good for bonds, meaning they're not going to go up, but they would be somewhat stabilized where they are. So you're probably okay, and I don't see any real sense of urgency. But you probably don't have an option in your 401k to go to like a money market account. So
yeah, I'm not sure.
Yeah, you probably don't. I mean, you might. Some do. And if you do, I would rather see you there than in bonds for the long run right now. So you're still making your contributions. So that's good. I think I heard you say you're still doing up to your match.
Right.
So that's good because if, as bonds creep down, at least you're contributing to it as they come down. And that's a good thing because that's going to help you recover a lot quicker.
Okay. Thank you. And my second question was, my daughter is young, just out of college or in college, and she and her brother both were given like $500 to invest because I was kind of hoping they would not be as fearful of the market as me. So I had invested a little bit of money for them when they were young and took it out and told them to, take a chance to see what they could do. So she's kind of more conservative like me. So I was wondering what you might advise her to do right now.
Well, the only reason that she would have any reason to be conservative is because she's going to have life-changing events. She's going to get out of college. She's going to want to buy a home maybe someday. She's going to get married someday. So on and so forth. So the next 10 years for her, there's going to be a number of life-changing events going on in her life. So for that reason, it makes a little bit of sense to be somewhat conservative because she may have to draw upon this money or want to use this money. But if it's strictly investment money that she doesn't think she's going to touch, then I think she has to, not now, but maybe next month sometime or the end of the year or next year. We'll wait and see how things continue to go. But she ought to try to invest some of that. And I would put it in a very large stock. And, as I get opportunity, I would add to it. And I think that would make a lot of sense for her. But keep in mind, if she's going to need that money in a couple years, it might be down when she needs it. That's why I look long-term, 8 to 10 years or further. But I like the idea, someone that young, to have some exposure to good, solid stocks. Thank you, Connie. We're going to get right back to the phones after this. 866-300-9298. We'll be right back.
Wisdom today, security tomorrow. Let's think about that. An old proverb compares a foolish grasshopper to a wise ant. The foolish grasshopper went about his days jumping from grass blade to stem, eating here and there without a thought to the future. The wise ant trekked back and forth day after day, storing up food for the days when the rains would come, making it impossible to forage. Today is the best day for you to begin planning for tomorrow, and the AFA Foundation can help. A knowledgeable AFA Foundation representative will gladly explain the nuances of charitable gift annuities and answer your questions so you can choose a plan that's wisdom for your situation today and security for your tomorrow. Find out about charitable gift annuities when you call 800-326-4543, extension 345, or by visiting afafoundation.net.
Good morning. Welcome back to Financial Issues. I'm Dan Celia. It's great to be here. We will be in Little Rock, Arkansas tomorrow night. Just give you a heads up, doing our town hall meeting. If you live anywhere near Little Rock, you want to make the drive. If you live an hour or so away, I know we'll have people there coming like 5 or 6 hours. I'm always amazed. But nonetheless, if we'll be in Little Rock, Arkansas, you can check it out. Go to the website. Either go to financialissues.org and register, or go to click on the Faith, Family, and Finance banner. Do that, or go to AFA Foundation.net, afafoundation.net, and do the same. We only ask for registration, not because it costs anything or we need to get a bunch of information. We just need a head count more than anything. So that's the main reason. So if you want to do that, that'd be great. So commodities, I went through that, told you what it was. It looks like futures are still looking about break even right now. So in a few minutes, we'll see how the markets are going to open. We're not expecting a whole lot of economic news. We do get retail sales numbers coming out Wednesday. That's a very interesting number. And with that on Wednesday, we get producer price index. That's also coming out on Wednesday. And we get the Empire manufacturing number. That's the New York Fed area manufacturing index. All of those things expected to be down right now, but we'll watch. We'll see how that goes. That's Wednesday. Thursday, we get the normal, first-time unemployment claims. But Thursday, we get Philly Fed manufacturing numbers. Friday's a bigger day, though. I think Friday's a day that's going to be interesting. We get housing starts number. That's expected to be down. We're getting building permits numbers. That's expected to be down. And we're getting Michigan sentiment number. Also, consumer sentiment, also expected to be down. So that's all we're getting, economic news, other than a whole bunch of earnings reports. 866-300-9298. Listen, if you have been in utilities, you've done okay. That's been the best sector in the economy in the last couple of weeks in the markets. I'm sorry. Utility stocks have fared the best. So as you know, I've had utilities on my buy list now for I don't know how long, a very long time. Maybe different ones, but I've had utilities. So I suspect a lot of you, if you're partners with me, have some utilities, and they shored up your portfolio a little bit. Plus, you're getting that income, so that's a good thing. The preferred stocks fared a little bit worse Friday than they had for the rest of the week, but still hung in there and doing very, very well. I told everybody on Friday that if you have not partnered with the website and you want to do so, then I will make sure that you get out the last 3 alerts, which will include 2 preferreds. I had a preferred that I was going to send out this week. I pulled it. I'm going to have to wait a while. I got to do a little more. I think I'm going to wait at this point to some earnings numbers. But nonetheless, that's where we are, and I'll send that out to you if you partner with us here in the next few days. But that's probably as long as I'm going to do that. I'm not going to let it go too long. We'll have to wait and see how the market goes. 866-300-9298. Let me go to Edna in Kansas. Hi, Edna.
Hi, Dan.
How are you?
I'm doing good. It's raining here, and it's kind of cool, but that's okay. Anyway.
Yeah. Yep.
I'm inheriting $114,000 from my mother's trust fund that my brother has been managing for about 25, 30 years. He's done very well with it.
Mm-hmm.
And the 7 of us siblings are talking about keeping it in the trust fund, changing the name, keeping it in the trust fund, and receiving monthly payments off of that. We don't need the money right now. We're 70 and 72 years old, not retired yet, but we'll be hopefully soon, and probably need the money then. So I'm wondering if this LLC trust fund would be a good thing.
Well,
or if you would have another recommendation.
So what's the source in the trust? What's going to be the source of the income? Are you going to just draw down on the principal and whatever interest it's earning over a period of time, or is there some activity within the LLC that is going to be creating income?
No. We'll just be drawing down.
Mm-hmm. Yeah, I mean, here's what I would say. I mean, if you know, if it helps everybody and you're okay with it and you trust the management of it and all that, sounds like you do, it would be okay as long as you understand that you're drawing down the principal. If you don't need a whole lot of income, but you need some income or going to need it at some point in time, I would probably do something a little bit different where maybe you can get a little bit more of a steady, consistent flow of income from that with, you know, something that is not going to draw down all of the principal. So that would be something like a charitable gift annuity. That would be something like a portfolio of preferred stocks and utilities and dividend producing stocks, or which I would prefer a combination of the two. And that would give you a consistent, steady income without the risk of outliving your principal. And I like that idea because what I don't want to happen is, you know, start drawing income and then you're 82 or 85 or whatever and you've used up your principal. So I would like it better if you could have something that's going to be consistent, or, you know, something that you don't have a risk of outliving.
So if we would do what you're talking about in the LLC, that would be a better deal then. Instead of
inside the LLC?
Uh-huh.
Yeah, I wouldn't matter to me. Yeah, I mean, if it doesn't matter, I mean, it's not going to be better than doing it on your own. You can certainly do it within the LLC, but yeah, I mean, I think that would be fine. Yeah, it wouldn't be an issue at all if you're able to do that. You know, depending on how it's managed.
What about this monthly payment that I'll be getting? I don't need it now. Should I put it in an IRA?
No, I mean, do you have a Roth IRA already established?
No, we don't.
Okay,
right now we have everything in land.
Yeah. No, I wouldn't. I would just put it in savings. I would just keep it in savings.
Okay.
Yep. I wouldn't put it in anything else. I would do that.
Okay. All right.
Yeah.
I appreciate your advice. Thank you.
Thank you. All right, Edna. Thank you. 866-300-9298. We've got 2 lines open. If you want to ring in, this would be the time to do it. 866-300-9298. Let me go to Donna. Donna's calling us from Virginia. Hi, Donna.
Good morning.
Good morning.
Good morning, Dan.
Good morning.
I wanted to ask you, I bought stock in ConocoPhillips for my grandson.
Yes.
And it's tanked.
Mm-hmm.
Should I just leave it there?
Well, yeah, absolutely. Ideally, you'd be able to buy some more. But if you can't do that, then yeah, just leave it. And I would say that across the board with all oil stocks. You know, this is a buying opportunity. It certainly isn't it is not a time to get out. We're talking about some of the largest companies in the world here. I would not get out. They're not going anywhere. But as oil prices come down, at first reaction to oil companies is it hurts their stock. It hurts their bottom line a little bit as their stock. But in the long run, it can help some of their other production activities if they're involved in any other kind of petroleum products. It can help their bottom line. So in the long run, but I think it'll be fine. There's going to be a stability that's going to come to it. They're paying a 4% dividend right now as that stock's coming down. So you're making 4% on your money. So another good reason to stay in. But I would definitely not get out. The only thing that I would suggest that if you have any opportunity to buy more, I would buy it.
Okay. Thank you so much.
You're welcome. Folks, you're welcome. Thanks, Donna. Folks, that just reminds me, when we talk about oil stocks, look, this is not a time on any stocks, in my opinion, unless it's really just a bad stock to begin with. But, this is a time when you stay in. This is when you have opportunity to do very well. And you shouldn't be looking at even thinking about getting out or, the only thing you should be thinking about is adding to, not getting out. So hopefully this is that opportunity that I've talked about for so long for so many of you, and one of the reasons why we have a fair amount of cash. So if you can, do that, if you can add to from your cash to some of these positions that may have gone down, this would be the time to do it. Certainly we could see, we've seen ExxonMobil take a huge drop. They're paying a 3% dividend. I'm not ready to put it on my buy list yet, but because I think there's still downside movement. There's no telling where the oil is going to end. But right about now, if you owned ExxonMobil at $100 a share, let's say, you should be buying more of it at 91, and you should be buying it more at 85 if it ever hits that. But you need to be buying on the way down. That's what that's the strategy that's going to work good for you in the long term. Let me go to Joe in Virginia. Hi, Joe.
To you for a long time. I
Thank
have
you.
a couple of questions. I'm about to turn 60.
Okay.
All of a sudden, I'm getting these letters. There's a company that I work for that wants to give me $231K as a lump sum payment, so they don't have to do the ongoing retirement plan.
Right.
I don't know if that's a wise choice, and if it is, where should I move it to so I don't encounter the tax burden? That's one. That's really the biggest question on my mind, because I have to make a decision pretty quickly, or it'll just default.
Yeah. So what you want to do, Joe, is you have to open up a traditional IRA account somewhere. And when you're going to get paperwork on that, and you're going to roll it over. They're going to deposit it. They're going to roll it over into your traditional IRA account. You won't pay any taxes. You won't have any tax burden on that.
Even though it's a large sum of money?
Doesn't matter. Doesn't matter. Nope. There won't be any taxes. If it
I
works,
thought there's only so much you could put into an IRA every year.
well, no. This isn't a contribution. This is a rollover.
Oh, okay.
So there's only so much you can contribute, but this is not considered a contribution. Okay. This is a rollover. This is IRA money that you've already contributed to, or the company has contributed to. This is qualified money. This is something different. So this would be a rollover account. You would put that in a traditional IRA, and then of course you would only pay the tax on it when you start drawing it out.
Okay.
And within that IRA, of course, you can have a lot of different type of investments.
Well, you say that, but the places that I typically think to go to, they have very limited options, right? I mean,
well, I guess I whatever. But if you go to a brokerage account, let's say you go online and open an account at E-Trade or TD Ameritrade, one of those, you can put CDs in there, you can put bonds in there, you can put stocks in there, you can put mutual funds in there, you can put anything you want in there. You have the whole world of investments. You will have no limitations. Now, I imagine if you go to a financial person that is, tied in with insurance, as more of an insurance person that's just doing mutual funds or just doing annuities or something like that, then yeah, you're going to be limited. But you don't want to. Whatever you do, you don't want to be limited.
So you're saying it's better to go ahead and take the lump sum?
Well, no, I'm not saying that. I'm just saying if you're going to take it to do that with it, I would always look at what the payout options are that they're offering you. So they've got to offer you a payout amount. They're going to offer you a payout amount now. They're probably going to offer you something for when you turn 65 or whatever. And I would look at that because I'm a believer in income. And I believe that your goal ought to be to create as much income as you possibly can. And frankly, it is going to be unlikely, although I talked to somebody last week on the air that I was wrong about this, but in most cases, if you take the payout, you could do better in the long run from an income standpoint because you're going to have that permanent income. And let's just say, for conversation's sake, that income is 7% of $231,000. So a year that you're getting paid out. Well, let's say it's 7%. If it's 7%, what are the odds of you making 7% every single year for the rest of your life on that money? Well, I would say because you're so young, the rest of your life, the odds are probably pretty good, but not without some consistent management, some developing a good strategy, sticking to it, doing a little bit of management in order to do that. If that's not something that you desire to do, or frankly, maybe you just don't trust the markets, which would be a legitimate reason not to do it, then you could set yourself up for a pretty decent income by taking the payout. So it's a tough decision to make. But I would say this to you. If it's over 6% income, on the $231,000, if it's over 6%, then I think that's a pretty fair deal when you look at that as being a lifetime income.
Well, they're doing 5.4 right now.
Oh, is that what it is? Okay.
Yeah.
Well, I mean, so you should easily be able to make 5%. Should easily be able to make 5%.
You mean by taking the distribution and
No, by taking the lump sum.
Oh, okay.
So on the 261, it should be easy to make 5%. You just got to come up with the right investment strategy. And, so if you have someone you trust, fine. If not, then do it, bring it over into a brokerage account and, join the website or do other things to try to come up to speed and do the right thing with it. Got to run. I'm right up against this break. If you can stay on hold if you want, Joe. Financial Issues. We'll be right back. Hi, this is Dan Celia from Financial Issues. Would you consider partnering with us in the ministry? Let me tell you what you'll get for a partnership with Financial Issues. You'll get access to my stock pick list that I put out every Monday. You'll also have access to your own asset allocation model. You'll get my email alert system that goes out on a weekly basis, sometimes twice or 3 times a week, that might alert you to something that's going on in the markets that could impact your portfolio, maybe a specific to sell a stock. By the way, everything I do is biblically responsible. When a stock, for some reason, takes a left turn, that company, and is no longer biblically responsible, I immediately issue an email alert telling you to sell it. You have access to our conference calls, our asset allocation model, and much more. Would you partner with us at financialissues.org? That's financialissues.org.
Good morning, Dan. Thank you so much for your passion and for igniting that same passion in us.
There is nobody in the nation that wouldn't debate the fact and doesn't understand that we need some sort of medical reform. We need to get rid of the corruption. We need to have a sense of fairness in what we're paying doctors and hospitals. Everybody agrees with that. But these are things that the private sector will do and can do.
I've heard the mainstream media say that Obama doesn't really know what to do. He's trying to save face because of what he said last year. I think he knows exactly what he's doing.
The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors.
Welcome back. Financial Issues. I'm Dan Seary. It's great to be here. 866-300-9298. All the major indices just turned positive. They all opened in negative territory. The Dow's up 43 right now, so up significantly. Not significantly. It's not even close to being significant. I don't know why I said that. But anyway, it's up 43. The NASDAQ's up 1, and the S&P's up 3. So that's where we are right now. Small caps coming up a little bit as well in the Russell 2000. But that's where we are. We'll have to wait. It's the volatility is so deep, so volatile, frankly. So we're seeing some very, very deep swings. And the only thing that's going to make a difference in these deep swings is volume, number one. But the fact of the matter is, because the swings are so, the volatility, is so all over the place. You just got to wait till the last 20 minutes of the day before you find out what's happening. But right now, it's trending up. It's up right now. 866-300-9290. I was talking to Joe from Virginia. Joe was talking about receiving a lump sum distribution on the retirement. And if he decides not to take the income that it offers, then, what do you do with it? And I was telling Joe before the break that, the best thing you do is move it over into a brokerage account if you want to have a full option or of every investment out there, or, talk to some people and find a good, solid, trustworthy financial advisor and go at it with that. But Joe had a follow-up question. Go ahead, Joe.
Oh, hi, Dan. Thanks. I just don't know how you go out finding someone that would be able to guide me through this process. It's obviously something that I really have not given tons of consideration to, but
right.
And honestly, if I didn't have great faith in you, I wouldn't be making this phone call.
Yeah.
So if there's a particular group or organization or two that I could go to that would be able to help me, because 5.4 and 6, there is a difference there. If it means that I have to be on point every day, really? No, right. I wouldn't be able to do that. I don't have the financial wherewithal to do that.
Right. Yeah, that's Joe, that's probably one of my number one questions I get when I do town hall meetings and I travel about and speak. And years ago, I don't have a group that I recommend and maybe I should. People say that I should, but it seems like every time I do, I get burnt because I get a call from somebody a year later saying that group you recommended, they're doing this and this, and it's nothing, in my opinion, that they should be doing. And so I just stopped doing it altogether. So I don't have anybody that I can recommend. Everybody believes, first of all, that being biblically responsible is totally different than what I believe. They think as long as they are biblically responsible, at least trying to live their life that way, then they're a biblically responsible manager. Well, I don't believe that, and that's a huge problem. Not to mention, I just don't believe in some of the strategies. So all I can tell you, Joe, is this: when you're interviewing and you interview people, you have a meeting, you set up an appointment, try to talk to a few people, see if they have somebody they like. Set up a few appointments. If you walk away from the appointment and they've already told you what they think you ought to do, it's probably a red flag. If they're looking to sell you any kind of insurance products, that's also a red flag. If they're steering you away from individual stocks, in my opinion, that's also a red flag. So, I can tell you what that kind of, that what you ought to look for. You ought to look for somebody that you ought to ask the question, can you buy individual stocks, and are you willing to do that? Are you fee-based or commission-driven? What you want is fee-based. You don't want somebody that's commission-based. You want somebody that's charging you a fee on your portfolio every year. That's far better than somebody that's commission-based, and that's what you ought to get, because then they're more apt to do what is right for your portfolio without any concern of commissions. And it's just a much better strategy. So I can tell you a few things like that you ought to be looking for, but it's a difficult process. And that is the hard part. And what I would recommend is taking the money. So here's what I would tell you to do, just to give you some breathing room. I would go to the bank, your local bank, and I'd open up an IRA account. And the traditional IRA account's all going to go into it'll just sit there in a savings account and collect a little tiny bit of interest. And roll it so you have a place to roll it over, so you're not under the pressure of having to make a decision without going through due process. So I would roll it over into the bank IRA account. As soon as you do that, your banker is going to tell you, well, you ought to see our financial guy. Then don't do that. Don't do that. Don't even consider it. Just don't even do that. Just leave it in the savings account. And then you go about the business for the next 6 months. 6 months, one way or another, is not going to have a huge impact. So I don't think there's a big sense of urgency. And, start to go through the process of interviewing some advisors. And I think that would be the wise thing to do.
Thank you. Thank you very much. It gives me like you said, some breathing room, because I actually feel real pressured by this now. So.
Yeah. No, don't feel any pressure. That's why I said just go to the bank and open up the account and sitting there in savings doing nothing, the 231. But now you got time you can take all the time in the world. You can relax and but you've made the decision to go ahead and take the lump sum, which at 5.5% that I think you should do that. So that's the right decision. Just gives you some time, and then you lose any kind of sense of urgency. Because if you have a sense of urgency, you're destined to make a mistake. So I think that'd be a wise thing to do.
So it's better for me to do it than to leave it in their hands to manage.
Yeah, I mean, into where it is now, you mean?
Yeah.
Yeah. I mean, I think it is. Yeah, I think it's better for you to do it unless you are I don't care if it's 5% they're making. I don't care if it's 2%. I don't want anything to do with it. I mean, unless you're that set on it, then. But I think that a decent, not even a great, but a decent manager should be able to beat 5.5% on an annual basis without any problem. That doesn't mean you won't have a year where it's down 6%, but you're likely to have a year where it's going to be up 19% too. So over a 10-year period, it's going to average out to more than 5%, and that's so. That's you get somebody to develop a good strategy, then stick to it.
Thank you so much, Dan.
All right, Joe. Thank you for the call. I appreciate it. I know it was helpful to a lot of people. Let me go to Debbie in North Carolina. Hey, Debbie.
Hi, good morning. Thank you for taking my call, and Dan, appreciate so much your ministry. I've learned so much.
Thank you.
What I haven't learned is what I should do about drawing Social Security. I am eligible, to take early Social Security, and I know I would not be getting 100% of what I would be getting if I waited till I was 70, say. That seems to be a good safe number these days.
Yes.
But I don't know what the positives and negatives would be as to drawing early. My husband and I are not on the same page. He plans to work till he's 70, and I have not worked for, oh my goodness, almost 15 years now. Okay. He's out of a job right now since the end of August, and I don't know what process looks like. Of course, neither of us do. So what would your advice be?
Well, the first thing you should do is if you go to my website, financialissues.org, right on the middle of the page, there's a little button under the news, in the news box there. It says Figure Your Social Security. Click on that and print that out. It's just 2 pages. It's nothing, that you're going to weigh through 20 pages or anything. It's not a big deal. It's, and that's going to give you some insights, a little worksheet there that you can kind of fill out and work through some things, just to kind of get a feel for the numbers. And that would make, that would be a good starting place. You can get that on my website. Again, you just click on Figure Your Social Security button. And this is all Social Security Administration information. It's nothing that I've developed or anything like that. These are the actual real-time worksheets that you would get if you went into the Social Security office. And it's pretty, they do a pretty good job of explaining it. So I think you ought to do that. And I hope that'll be helpful to you. The other thing is, so I'm a believer in waiting. You probably know that, Debbie. You probably heard me say that, but I like to wait if you can. I think it is, if you're in good health and you feel as though, you've got longevity and I'm all about maximizing your monthly income. I plan on waiting until I'm 70. It sounds like your husband plans on waiting until he's 70. Now, obviously, if something happens, that can change, but from a health standpoint. But nonetheless, I just think, and everybody you talk to is going to say, oh, no, start getting it right away. Well, they say that because, and this is true, they're right on this, you're going to receive maybe more money over your lifetime if you start getting it early. But who cares? See, I don't care. I don't care that I'd start, I'd receive more money over my lifetime. What I care about is the ability for me to pay my expenses, my bills. And I want as much monthly income as I can get. And while I'm 62, I would be able to still get out. Maybe I can get a part-time job. Maybe I can, if you needed the income, you could do some things. But at 75 or 80, you're not going to do that. So that's why, I want everybody focused on, income. While you're on my website, you can read right above that. There's a thing called, isn't that terrible? The case for income. It gives you some insights to my thoughts about income. That is something I wrote, and you can read that as well. But I think that, it's always best. I think it's always best to wait, because you may not like waiting now, but you'll be glad you did when you're 75 and your income's a little tight, and you'll be able to think back and say, well, I'm glad I got this extra $150 a month for waiting, or $100 a month, whatever it was, for waiting. It'll mean a whole lot more to you then.
Okay. Thank you.
All right. Thanks. All right, Debbie.
A second, and we'll go get on the computer.
Okay. Thank you. 866-300-9298. I would tell everybody that's getting ready to collect Social Security to do that. If you want to get some information, instead of going to the Social Security website or going to see them, it's right there, and it's just 2 little pages, and it's pretty self-explanatory. You won't have any trouble, and there's a button in the middle of my webpage called Figure Your Social Security. And you click on that. It's free. I don't ask you for information. I won't know that you clicked on it. I won't know any. It just goes right to the page, and you can print it out or you can read it. So check it out at financialissues.org. 866-300-9298. Let me go to, do we have time? Let's see if we can squeeze Pam in here. Go ahead, Pam.
Hi, Dan. Thanks for your program and your honesty.
Sure.
I will just ask a question. If we do have a serious downturn, a crash, something like that, would we expect to lose our Social Security benefits immediately? That's the retirement fund.
Yeah.
Thanks.
No, I don't believe so. I'm not in that camp. It is unlikely. The only way that would happen is if we had an extremely a socialist, Marxist-minded administration like we do now, and Congress too, both. And what they might decide is to replace it, or the fact that you are replacing it by way of, food stamps and other government programs, and probably new programs that may come about. But I'm not in that camp. I don't think it's going to be lost. I think the people that are already collecting are the safest in that whole scenario. So I'm not in the camp that that's going to happen. Okay. Thanks, Pam. 866-300-9298. If you want to queue your call up, folks, we'll get right back to calls after this break. 866-300-9298. You're listening to Financial Issues. I'm Dan Celia. Right now, all the major indices in negative territory. It was up 48 to down. Now it's down 13. So that's where we are right now. Everything is in negative territory, not based on any kind of news. But already the trading day has been open for half an hour, and we're already seeing some great volatility. So Big swings already. So we'll just have to watch and see how the end of the day shakes out. But that's where we are right now. All the indices in negative territory. You're listening to Financial Issues. I'm Dan Celia. We're trying to help you be the best steward of what God has given you. And we hope that you'll be able to continue to do that.